All right, everybody, what's up? Hopefully, everybody's having an awesome day today, and hopefully, you're all green and utilizing the watch list that's been getting posted the past couple of weeks. And yeah, I really hope everybody is gaining some good gains. Also, make sure you manage your stop losses. I know the market's been a little crazy, it's been a little volatile, but nonetheless, it is still green. Okay. Um, so what I want to talk about today, guys, is just to give you a little more insight on what price action is. Okay, I'm gonna give you the definition to the price action, and I'm gonna show you just a few things on some certain time frames that can probably help and guide you guys to understand what it truly is. Okay, because price action is the only thing that I trade. As you can see on my chart, I really don't have any indicators. All I had was these little boxes right here and a few lines that you barely need, but with many alerts. As you can see, Disney here. And this is the first ticker I want to talk about just because it was like one of the top plays on the weekly watch list. And I can explain a little bit better on the price action here, of course, with a few other tickers. So, what is price action? Price action is decisions based on the recent and actual price movements. Okay. So basically like this, something that has happened in the past that will happen again in the future. Okay. Nothing is guaranteed that will happen in the future, but there's a higher probability that it will. That is price action. Okay. So it gives you a judgment based on the process of everything that's happening based on price action. Okay. Remember, you as a trader are making these decisions to enter and exit based on something that has happened in the past. Okay. Hopefully you guys bear with me because this is a little easy to explain, but you can be confused if it's not something that you are normally used to. All right. And I want to show you on the chart what it is. Okay. So here we have Disney. Okay, we have this top right here around 190. Then you got that middle level, which is like this 185, which we're currently trading at right now. And then you have like this bottom right here at like 182. So I want you to focus on these things. Okay, so looking at the price action here. Okay, what did I just say? Something that's happened in the past will happen in the future. Okay, and let me show you. In the past, this thing was rejected right there. Okay, you're looking at a resistance. Okay, same thing the next day. Look what happened. Okay, right there, what happened? The same thing. Even though we had a nice green candle there, it got rejected. All right, so look what happened again at these levels. Okay, so how do you make the decision, right? If you would have traded this here, this little pattern, this nice little falling wedge right here, you would have grabbed it and ended up taking profit at resistance. Okay, so again, goes back to your judgment. You are making these decisions on a past movement that has happened before that will most likely happen again. So you traded the pattern, you let it ride all the way to where the price action happened. In this case was a bearish price action. The price action creating supply, supply creating resistance, resistance creating short selling. Short selling also people taking profit. So look what happened here at this 190 level. Disney got rejected and came all the way back down to the 186, basically from where we broke out from. Because that's what happens. Whenever we break out of a pattern, you got to come back and retest, okay? That's what happens in this market. That is price action. That is something that's happened in the past will happen in the future, guys. Okay? So make sure this is engraved in you guys. Price action, that's what it is. Okay, I hear a lot of people talk about price action, but they can't even explain it. And they talk about price action and they're brand new traders and they still can't even explain it, and they got a million indicators up, talking about price action. But look at this. Look at the price action here. It tried to push again, and then it got rejected, right? And then you just see it coming down, you trickling down. So technically the price action on this is still bearish. The sentiment is bearish. The volatility on this is bearish, right? So again, let's look at the support that happened here on Disney. Okay, you see how we have all this support here. Okay, we have support here for Disney, and then we have resistance right here for Disney. So currently where we're at right now, and I know a lot of you guys ended up trading Disney here and started looking for the value of it. So what is the current sentiment of Disney right now? Everything is a little bullish. So how do you determine where we're gonna go and how you're gonna trade this? The last video that I talked about, I said it's better to buy the dips on these stocks when they start to create a staircase pattern. A staircase pattern looks something like this. Okay, let me just show you. This way you guys understand what a staircase pattern is. Okay, it's something like this. It doesn't have to be perfect, right? But you want to see this, and you want to be able to buy on the red candles. Okay, this is basically I'm telling you guys to start buying on the dips. Okay, you don't want to trade breakouts because this is going to happen, right? You want to take profit when you sell into strength. When a stock moves to the top, you want to sell into strength. Therefore, you're managing your risk and you're taking that IV pump versus a breakout that's only going to be for like 5 minutes and you've already missed the move from the bottom, right? So you want to capture a staircase pattern when it comes to price action. When something trend changes, you want to be able to capture the price action that's happened in the past. So how do you use that? Just like we did with Disney, right? So how are you going to look at this moving forward? This is what I talked about in the swing trade. I say, look at these candle bodies right here. This becomes now your trail stop, right? If you got in Disney, you use 50%. Move that thing up and use those candle bodies here. You want to move it up a little more and get tighter? You use this 50% 4-hour candle. You use that. So technically, we still really haven't broken down because we're right on top. And you see how we bounced right there on that 50%. But then this thing just ended up pulling back today with no aggressive volume. Okay. So the trend is still your friend, and look where we bounced at this 182 level from where we bounced at before, where it created support, and now we're at resistance. So technically, this is the area where you should be taking profit and not thinking twice about it. Why would you want to trade it over the 185 when the move already happened from 182? You're trading this top and you're buying this top because you as a trader probably have not looked at price action, and you're so used to buying the breakouts on stocks and patterns and things like that, but you're not used to trading a staircase pattern on something that trend changed already. And this Disney is already something that trend changed, and that's something that I talked about in the recent videos. So basically giving you great information here for you to continue trading your ticker. Grab that staircase pattern, buy on red candles, buy at support. Why? Because your stop loss, if this 182 is your support, guess what? You move it 20 cents below, and that becomes your stop loss. If it wants to go back up over that same level, get back in at that same level. It's simple as that, but we as traders make it so difficult because we don't understand price action and we don't like buying on red candles. Buying on red candles is probably one of the best things you can do, because then therefore now you're following the model: buy low, sell high. Not buy high and sell higher. Get it together, guys, all right? This is price action, a decision that's made based on something that's happened in the past that will happen in the future again. And then let's go on the smaller time frame and let me show you the move that you could have caught on Disney. Okay, if you had that 182 level, if you guys had this, look, you would have entered at 182 and you would have never got stopped out. You would have never got stopped out. And then you would have caught the move all the way to this 185 because that's resistance. All right, and you would have taken profit. But now, anybody who got FOMO and anybody who did not understand what price action is, or did not understand how to buy the dip, they're over here trying to buy it over 185, getting faked out to 185.67, and now they're cutting loss because they see a little red candle. And in reality, you missed the whole move from 182 to 185. That's a $3 move, guys. Like, come on. This should have gave you a nice green trade, and this should have provided some good profits for the day had you been patient, had you been um, been very patient and waited for this dip buy. And now, as market is rolling right now, I bet you some people bought that 185 and then just basically got stopped out, and then they're wondering if it's still going to keep going. Well, you're at resistance, guys, and we just had a $3 move on Disney, so the ATR for Disney is not a $5 thing. Yesterday was a breakout, so it created a nice momentum move, and which created um, the IV to increase and a lot of buyers to come in. So these same buyers came in at the dip, guys. Okay, so these buyers that are coming in at these dips understand what price action is. So yeah, hopefully you guys understand that and didn't go too fast on there, and you guys are taking notes. All right, so I want to explain that on this, and then I also want to show you something else. And this is basically off the watch list. Okay, CRM. CRM is another one that's on the watch list. Okay, and this is another one that I was watching today. It was pretty awesome. But let me show you. All right. The actual breakout for this range is around this 247.50 and 246. Okay. This is the area that I want to see break out and continue to the top in order for the trend change to continue. Okay. It doesn't mean that you have to only wait for this. You can grab the dips and let me show you. Okay. Look at all this buying right here. Look at all this buying and look at all these wicks that are right here and just pressing up to the top. And then you look at these wicks right here and they're just pressing it down. So we're tight. We're literally so tight. But look what it created pre-market. It created a nice little base down here, right? And all the buyers that were here at one time, right, in the past, that they were here in the past, they're back here again and they're showing signs of, hey, we are still buying CRM around 240, 250. We want to hold CRM here. This is where we're holding our shares and we're going to fight for this value, this level, right? Just because we haven't seen the breakout doesn't mean that there's no buyers in this stock. There is technically still buyers, and once this range breaks, it's going to continue higher because the buyers are still here pressing this stock to the top. Okay, so in the next couple of days, make sure you guys watch this level around this 246 and 247.50 to build candle bodies right above and continue this trend to the top, which creates that price action, that pressure building of buyers, right? And it takes away all the sellers from this stock, right? And it pushes them way up here. So your target is going to be this 253. I would start taking profit around 250, 250 just to be safe, and you don't want to get caught in any type of aggressive pullback. You want to capture the move right here. Okay, so there's a difference. This is not a staircase pattern yet. Okay, this is a range breakout. Disney was a staircase pattern on something that already broke out. So once this breaks out, you will get that staircase pattern to the top, and CRM will trend change pretty nice. Okay. So understand that on CRM. And then let me show you another one. The other one that I talked about for snow. Okay. Same thing here. Okay. Look at this. What I mentioned about staircase pattern right here. Okay. The breakout was right here. This was posted in the video. And then look what we got. We got that pullback, right? And then today, green. I was able to trade snow today for a good percentage. Made my account go green on this trade, which was pretty awesome. And guess where I took profit? Okay, going on a smaller time frame. Look at this. I ended up taking profit around 275. Well, I'm sure that a lot of people ended up going long over like this 272, and they only captured like a little quick move, but the move happened right here around this 265 right at open. It started to push. Why? Because look at the price action over here. Okay, we ran, we had a solid day. There was no reason for this to continue on that same day, which it could have, but it didn't because the move was so aggressive already, right? And then you get that pullback, and then here, like I said, you use that 50% retracement. We're holding that level, and then now you're using your pre-market levels, and it's holding. Okay, everything about this stock is holding, and it trended up. So yeah, we're gonna be buying on red candles. So even here, if you wanted to scalp, you can still use that 270 psychological number as a entry for calls, and you can ride it all the way to the 275. Okay, now I'm not saying that that's exactly how it's going to happen, but you have a higher probability of buying on these red candles on the way up for something that is trending. Okay, once we break out of a range, that's what's happening to snow. So over 275, it will create more momentum, but honestly, I would rather buy the dip for something like this. Okay, anywhere in here, this is where you want to dip by. Okay, why? Because look at the high. This is the high. This is where we consolidated just a bit, where we rejected and we reclaimed it, and now we retested that same 270 level. Okay, the 270 level and the 275 was the levels that I provided for you back here, right here. This was your whole resistance. That 270 to 275 was going to be a supply zone. That supply, if we can build over 275, then for sure we'll head into the 300 pretty soon. And of course, it doesn't have to happen this week, and it can happen in the next couple of weeks. But look, you can even do something like this, like that, and then make sure to follow this trend. It can squeeze right here. It can create another like pennant. It can create a ascending triangle, a symmetrical triangle. I don't care what you do, as long as you create a pattern. Remember, if you go back to the swing trade video, I said look for a pattern right at a supply zone with volume and continuation. That's what it'll give you. And if it has a catalyst, well then awesome. But as of right now, it's still slowly creeping up. Buying the dip on this is better because it's a staircase pattern. Okay, and the staircase pattern, again, it's price action. Something that's happened in the past will happen in the future. So definitely look forward to snow to continue, and then better to buy on red candles. Okay, with your stop loss right below. It's that simple, guys, for real. Okay, so I just want to give you guys a little information on what price action is and why I trade this so much, because it makes much more sense versus trying to wait, for an indicator to tell you that it's okay to go long or to go short. That's why I personally don't use indicators, because it's price action. Price action is based on sellers and buyers in the market, and that's who I follow. That is what this market is made up of: two things: people buying and people selling. That simple. Okay, so yeah, hopefully this helps you guys and guides you through your guys' journey. Please like, subscribe in the video, guys. See us at Conservative Collectors. If you guys have any more ideas on or request on any type of videos, please let us know in the comments down below. Tag us, tag Jay the Trader. He's freaking amazing. The YouTube channel is growing, guys, and we hope that you guys grow with us too. That is the goal, that we want to provide some educational videos, and hopefully to educate you guys a lot more in your trading journeys. All right, so I'll leave you guys with that. Please stay green, manage your risk, guys. Don't get any FOMO. If you guys missed a trade, it's okay, stay away. It's okay to close your laptop and just walk away for the next few minutes if you have to. If you got to take a day or two off because you took a beating, go ahead. It's okay, guys. Remember that this market is not going anywhere, right? There are still buyers and there are still sellers all across this market, from here all the way to Egypt. Okay, so yeah, I'll leave you guys with that. Y'all have a green day, and I'll see you guys on the next one.